Hey guys, John Palomy here, Actionable Intelligence. Today is Sunday, March 1st, 2020. This is the weekly market update. So, first of all, I want to talk about the reality check. I'm rereading a book about Charlie Munger, one of my investing heroes, if you will, person I try to emulate. And although he might not be the richest investor, Warren Buffett obviously is far wealthier than Charlie Munger. Charlie Munger is a billionaire. But what impresses me about Mr. Munger is his thought process, his commitment to being thoughtful and trying to purge biases and emotion from his thinking. You know, I've said this before, but I think emotions and and impulsiveness and failure to think through things is what gets a lot of speculators and investors in trouble. And when reading the book, there was a vignette in there, or maybe it was an audio book. It's about Charlie Munger's life. Anyways, there was somebody that was sitting next to him at a dinner, and they asked him, "What is your key to success?" And he just answered, rationality, being rational. I mean, he pondered it for a minute, but what does that mean? People know that I am big on defining words because most people that you encounter just say stuff and they use words, they don't really know the meaning of them. If you don't really know the meaning of the words that are being used, you probably don't know what you're talking about. So what does rational mean? Well, a dictionary definition is the quality of being based on or in accordance with reason or logic. So we have to use reason, we have to use logic, we have to be dispassionate, we have to be Mr. Spock. We have to purge emotion and, rushes to judgment and panic and these type of things out of our thinking, especially if we're dealing with the markets. And what we saw last week is panic. And I will get into that a little bit later. But I want to give an example of how we as speculators and how I think about things. I can't get on here. There's always going to be people out there. You keep saying the same thing, John, but nothing ever, happens the way you say it's going to happen or whatever. There's always a wag out there, drive-by commenters and ankle biters. But I want to use an example from one of the most asymmetric speculations we've been talking about since I've had this channel, which is over a year now, and that's uranium. I'm bullish on uranium. Everybody knows this. The reason why, the thesis quickly, supply demand, we all know the thesis. So you have a situation like last week where you have panic selling. And what happens is when you get panic selling, especially, in a lot of these hedge funds or private equity firms or whatever, people that are trading houses, whoever they are, a lot of them are trading on leverage. They're not just like you, I don't have any cash, so I don't buy anything. They lever up their portfolio. And sometimes they try to put uncorrelated instruments in their portfolio when they're levered up to try to use as a hedge. For example, they might be long a lot of growth stocks, so-called growth stocks like Facebook, Google, Amazon, and then maybe be holding gold because they think that the stock market and gold are uncorrelated. And then when you have a panic selling and they're leveraged and they have to sell down and get liquid, then they got to sell everything. You got to sell what you can sell to get liquid, especially if you're on margin. So we had this panic last week and everything's just getting sold indiscriminately. Regardless of the fundamentals don't matter because you're dealing with emotion, fear, panic. That's what you're dealing with, okay? And you have to step back and make that your friend. So let's look at it from the perspective of uranium. Uranium Participation Fund, physical uranium, physical UF6. You can buy it. They hold it. You buy it. Every month, the management there does a net asset value determination and publishes it. So I think the last published net asset value determination for the fund was $4.22 Canadian. That was around like February 19th or 20th. The close, so if they liquidated everything at the current price, theoretically, it's worth $4.22 a share. But on Friday, because of the panic that's going on in the markets, you can buy $4.22 of uranium in UF6 for $3.80, like an almost 10% discount. Now, this fluctuates, this net asset value and discount, or sometimes it's at a premium. But what changed in the last week, 2 weeks, 2 months, vis-a-vis coronavirus and what we think is going to happen with uranium and the nuclear industry? You know, the supply of uranium didn't go up last week. The demand is baked into the cake because the reactors are long lead time. They take, we know what's going to happen. Even if this was a pandemic, we're not going to stop building nuclear reactors. Excuse me. But yet, people panic, get emotional, and just sell everything. Or they're forced to sell because they need liquidity. And that's why you have to, if you want to be successful long term, you have to use panic and fear that other people, that's forcing other people because they don't have the same discipline you have to step in and buy. The thesis, what I'm saying is, the thesis did not change because of coronavirus. The thesis for uranium and the nuclear renaissance around the world did not change because of coronavirus. Are some job sites in China maybe shut down? Well, I don't know. They may be. Do I think that the coronavirus is going to end the world as we know it and humanity is going to be set back like like the Black Death? No, we already know that's not going to happen. And people say, well, the data out of China. Well, one person in the U.S. has died so far. Now, I'm not saying it won't spread. There's going to be more people getting this. Okay, but I'm going to put an article up about a guy that adopted a kid in China and was over there, and he talks about the healthcare system. I mean, it's primitive. And what he encountered there and what you're going to encounter here. And okay, so you don't trust the stats in China. I agree. Well, you can go on the Johns Hopkins website and the GIS tracker for coronavirus, and you can see what's going on in Hong Kong or Singapore. I don't think the government in Singapore is lying about things, and you can see what what's really happening. But there's always going to be conspiracy theorists. I'm not going to go down into those rat holes. The bottom line is the world's not going to end. This thesis around uranium did not change in the last week. All you were given is you get to take advantage of other people's irrationality, is what I'm saying. Somebody's handing you $4.22 Canadian worth of uranium for $3.80. If you're bullish on uranium and you have funds, you have dry powder, you should take them up on that offer. That's what I'm saying. So, being rational, we've talked about this many times. It's hard to do. It's easy to talk about. It's easy for me to get on here and say it. It's hard to do. And you just have to be dispassionate. If you can't do it, you can't do it. Can it get cheaper? Yes. The thesis still doesn't change. If it goes, say the price of uranium participation goes down to $2.80, the net asset value is not going to go down that low. Or the lights will go out, or you will have dissolution of civilization. So use other people's fear and irrationality for your advantage. That's over the long term. Let's look at what's the world look like in 6 months or 12 months? Is it the Black Death? Is it the Spanish flu? Is it H1N1, SARS? You don't even think about that stuff anymore. I mean, how many people died of malaria yesterday? More people than died of coronavirus. But the news media and the Twitter sphere and social media, I mean, this thing has just went nuts. How many people died yesterday coming back from bars in the U.S. drunk driving? I mean, it's just, it's it's kind of irrational. I'm not downplaying it. Yes, if you get this and you're already sick or you're immune compromised, you have a high chance of, not a high chance, but a good chance of, you could die. You could die if you're relatively healthy. But you could, go to the grocery store and get somebody can blow through a red light and kill you too. I mean, what I'm trying to tell you is we have to really kind of look at what's really, at this point, I think we have enough information to say what's really going to happen. More people are going to get sick. And it probably will be with us for some time. And they're working on vaccines as we speak. It's going to take them about a year, but as we get warmer, this thing should subside. As the weather gets warmer, this thing should subside, and we'll probably come back next year and the following year. It's very possible. They had the genome on this thing sequenced within 3 days. People are working on it. There's things happening. So it is true that global supply chains are being affected. We're probably going to have a global recession due to this. But there's certain pockets that you can be taken advantage of. This is the panic I'm talking about. This is the S&P 500. We talked about the stock market being overvalued ever since I've had this video channel on YouTube. And finally, it's not that the reason that the market broke is because of coronavirus, people getting sick. It's because of what's happening to the global supply chain. How many parts are in a typical vehicle? 10,000 different parts from maybe 1,000 different manufacturers. So if you have supply chain disruption because people have their supply chain all over the world, a lot of it in China, and you have a just-in-time inventory system, which means that you don't hold a lot of inventory. You set your production schedule, and then everything's arriving as it's used, basically. So if you have an interruption to the supply chain or your supplier has a hiccup, you're going to have some issues. And that's what we're starting to see reports of. And that is what's going to affect the economy. The mismanagement of government in, Japan, for example, letting all those people off that cruise ship, and now their government's panicking, they're shutting things down. So, I would say that yes, we don't know the full economic effects of this, but it's like the equity market finally woke up and we had this big sell-off. Now, this is obviously oversold. You have these big gaps. You're probably going to get a relief rally, but I don't know what happens after that. I'm not, like I said, but I don't forecast, the general stock market. I'm thinking out 3, 5, 10 years and what the major trends are. This market was overvalued, was looking for a reason to go down, and it finally found it. So, unfortunately, when the market goes down, about 95% of the stocks go down. So we have a lot of stocks going down. It's interesting. We have some shipping stocks that I've been touting in the past, and I'm still bullish on them. Why? Because if you look at some of the earnings reports that have come out just in the last week, the shipping companies are killing it, and they're forecasting, that they're going to keep killing it. Now, we don't know because of the unknowns around the economy, but we still have rates at 10-year highs. Rates are cyclical even during the year in the shipping industry. And if you look at current rates as opposed to last year and the year before, we're still higher in many of the different subsectors. But people just indiscriminately sell. We had a lot of tourists come in. I've seen this before in industries. You see the same thing like in marijuana, Bitcoin. You have all these tourists that come in at the last. They don't really know what's going on, and then they're the first ones to leave. So you have these big sell-offs. And like I said, this is just indiscriminate selling. Everybody just sells everything. That's why gold, dropped $60 an ounce on Friday also. But I look at the long term. So what are we looking at here? We are looking at charts of basically growth stocks in heavy blue and value stocks in light blue. And what I call this right here is like alligator jaws. You've had this big running growth, and value's been out of favor, value stocks, which is what we really try to look at. A lot of things that are undervalued or out of favor. This is all your nifty 50 type Google, Amazon, all that stuff, okay? But you see, we've seen this before. We've had a similar situation back in 99, 2000. This was the tech bubble, if you will. And the same thing, value was out of favor and growth was in favor. And if you block out everything to the right, those were alligator jaws and they snapped shut. Growth plunged in value and value stocks rallied and closed the gap. Not so much, you saw this exact same thing reversed. These things go in trends, they go in and out of favor. And this is a pretty huge gap here, similar to what we saw back then. So even as growth stocks were plunging in 2000, 2001, value stocks were rallying. Are we seeing something similar? It's just pattern recognition. That's no guarantee it's going to happen, but take a look. That is our bet. Mean reversion. It's like if I get ace king dealt to me suited, I know what my probabilities are over many, many hands that's going to be a profitable hand in Texas Hold'em. But that each individual hand doesn't mean I'm going to win each individual hand. Over 1,000 or 10,000 hands, if I play it the same way, I will make money with that hand. It's the same thing here. There's no guarantee that this alligator jaw is going to close here, that we're going to see growth go out of favor and value come into favor. But in the past, we have seen that. And I wanted to point that out. So let's talk about China. China is in a recession, a bad recession. Fact, PMI, what do you call that? It's Purchasing Managers Index. It's a survey, excuse me, of purchasing managers. And the factory that measures factory activity, manufacturing activity. And in China, this is contracted at the fastest pace on record in February, this last month. The official Purchasing Manager Index fell to a record low of 35.7 in February from 50 in January. Now I've talked about this before. The cutoff for growth is 50. If you're above 50, that's showing growth. If you're below 50, that's showing contraction. Well, it goes without saying that China's manufacturing is in contraction, and that ripple effects are now spilling out over into the global economy. I just put this blurb in here. China's economy could contract outright in year-on-year terms this quarter for the first time since at least the 1990s. It was for sure going to happen. We just don't know how far. Now, when this thing finally subsides, there's going to be a big snapback. And this is part of my thesis. We don't know the point of maximum pessimism. That's what's difficult to determine. We don't know when this thing's going to actually turn, but I have seen data that some factories are going back to work. People are even looking at stuff like smog activity in various cities or traffic patterns off of like various sites that track that, and you're seeing stuff go from almost a standstill and stuff starting to return. So this may be like, who knows? Okay, but you're starting to see some of this. But like I said, you're getting ripple effects across the world economy. I mean, this is also going to be a wake-up call for globalization. We were trending away from globalization anyways because of the political situation, the rise of the strong man and nationalism around the world. When you have like most of your like pharmaceutical ingredients are made in China, and people start running short of medication here in the next month or so, if that spillover continues, I mean, that could be a problem. And I think people are going to look at that from a national security and from quality of life. You're going to say like, people died because they couldn't get their medication because we couldn't get the ingredients from China because everybody outsourced everything to these places. So I think that's going to change over time. It could, depending on how bad this thing is. This thing, if it starts to get warm in the spring and this thing just peters out, then no one's going to care, right? Like just like H1N1, you don't even think about that. Or SARS or MERS, nobody thinks about it. Everybody's panicking now because social media is so pervasive. I mean, everybody's on there 24/7 fueling their fear if they're predisposed to that. But we don't really know the facts. They will come out over time. I just wanted to point this out that's the lowest we've seen on the PMI, since the 1990s. That's, not good. But another thing we talked about is we said, what are central banks? Central banks and governments, let's go talk about central banks first. Central banks have one tool, and they are engines of inflation. They have a big 5-pound sledgehammer, and they can only do one thing, is swing that sledgehammer. They can only create inflation. They can create currency units. Governments, for the most part, even if they're not democratically elected, they still need long-term the acquiescence of the populace to continue in power. And so what we've seen here is one of the first shots across the bow. What I expect to see more of this is helicopter money. Lowering interest rates doesn't really do anything to get production started for the guy that's making your door handles for your car that you're putting together in Mexico. And you got to get, the alternator from South Korea, and the door handles come from some factory in China, and the glass comes from another factory in Mexico, and you're putting this thing all together and shipping it, to the U.S. Lowering rates doesn't fix that because the government has basically the whole country in China in quarantine. But one of the things you can do to get some high-powered money into the economy is just give money into people's bank accounts. And that evidently is what the government of Hong Kong is doing. So there's an article, I'll put a link to it in the show notes, but basically the Hong Kong Financial Secretary Paul Chan announced a 120 billion in Hong Kong dollars, about 15 billion in US dollars relief package in an effort to shore up economic confidence in a city battered by political unrest and the coronavirus. The main feature of Chan's annual budget is a payment of, it's approximately $1,300 to each permanent resident of the city 18 or older. So government has to be seen to do something. They can't just sit there and say, let's just ride this through and this will pass over. Because they're humans too. They want to stay in power, especially if they're facing elections. We got to be seen to be doing. Somebody needs to do something. That's what the average boobus voter out there says, is somebody ought to pass a law. Somebody needs to do something. So that's what politicians do. The most important thing for a politician, his or her biggest problem or thing that they're worried about is getting reelected. So they don't want to be seen as being ineffective by the boobus voters. So I expect to see more of this. They're just going to hand out money to people. Well, people, for the most part, will spend it. And you start spending money, yes, you can get a temporary sugar high from that, but it also has a tendency over time to create, price increases. We're not talking about, injecting money and buying bonds and treasury securities and changing the reserve requirements so that people can borrow money and speculate in the markets with it. You're actually going to be handing money to people to spend, the average Joe Schmo on the street. Central banks everybody's talking about what are the central banks going to do? Is there going to be some policy response over the weekends when the markets open on Monday? It stabilizes them. Hey, look, we're going to have a global recession more than likely. Central banks they only have one tool: print more currency units. That's what they're going to do. I had a WAG, and I'll show the chart later, that was on the comment section in a couple of the videos when they talking about gold. The Fed and these central banks are telling you what they're going to do. They're going to create currency units as much as they think necessary, probably more than is ever going to be necessary to stabilize the markets. That's what they did in the Y2K scenario, coming up to Y2K, which was when the computers were all going to nut up and we were going to go back to the Stone Age. I don't know how many people remember that. I do. Bernanke cut rates, he liquefied the system, and that helped provide rocket fuel for the tech bubble that happened in 1999 going into 2000. Now, the whole thing was a fart in the wind. Nothing really happened, but the legacy of printing all that money was there. It created one of the biggest bubbles in the tech wreck, stock market collapse that happened in the NASDAQ when it went down about 80 or 90% after that bubble. I'm not saying the same thing will happen, but that's one of the outcomes that could happen if we have all this money printing. Another thing that we're going to see, because we have this rise of nationalism and decay of globalism and populism, we're seeing more populism, as I expect physical spending. Germany's already talking about it. And I think other countries are going to be talking about it. Russia, I said this on a video or an article several months ago, has a huge physical spending program going on. So what I'm trying to tell you is that there's going to be a response to this, and I think it's going to be inflation. I don't want to use the word inflation. It's going to manifest itself in higher prices. And typically, when we print money and we create a stagflationary environment, that's usually good for the things that we are talking about, that we are speculating in. Here's the gold chart. We're in a gold bull market. We have corrections. Gold was overbought. It was due for a pullback. It was part of the whole big liquidity sell-off. It's easy to sell, so people sell it. Can it go down lower? Yes. Will it? I don't know. I'm not a trader. Do I think it'll be higher, a year or 2 years from now? Probably. That's why I like it. If you want to get on here and razz me, that's fine. I'm still bullish for reasons that these governments have no way out. $250 trillion in current liabilities on government balance sheets as far as real debt, not counting all the off-balance debt. If you don't think that that's going to, there's not going to be a debt jubilee. These governments will do what they have always done through the history of man. They will attempt to keep off the day of reckoning for as long as possible through a combination of higher taxes, devaluations, currency depreciations, whatever. Read history. You can pick up a $30 history book or go to a flea markets and buy books on history of the world or former empires for 50 cents or $1, or go to the bargain bin at Barnes & Noble and get books like The Fall and Decline of the Roman Empire. You can read about the Spanish Empire decline. All these different empires, it's the same thing. They spend too much money, they grow too big, and they collapse under their own weight. And they always try to hold off the inevitable. People don't just give up power and say, well, you know what, this didn't work. We really don't know what we're doing. We're going to retire and go away. The United States has $200 trillion, however you want to measure, between $100 and $200 trillion of unfunded Social Security and Medicare liabilities. If you want to say that gold is not going to respond to that, there's no way to pay that out of Social Security and Medicare taxes. But they will try to pay it. Then you can go back and look at the YouTube videos of the interactions between Congressman Ron Paul, and Alan Greenspan when he was Federal Reserve Chairman, because they talked about this. And Chairman Greenspan said that we have this thing called a printing press, and we can create as much money to pay those liabilities as we want. However, I do not guarantee the value of those currency units. That's basically what he said. That's what they're going to do. We're getting to that critical stage now. Okay? The economy is supposedly, before this whole coronavirus thing started, was already running close to $1 trillion deficits, and the economy was supposedly doing well. We were all-time highs in these markets. Risk was on. The good times were running. President Trump said that unemployment's the lowest it's ever been for all these different categories, and wages are up, and boy, is it wonderful. And why are we running $1 trillion deficits then? Wait till we have a real recession and these automatic stabilizers and spending programs that kick in for food stamps, unemployment, and all these other things. Oh, and by the way, the tax base collapses. What if we're running $2 trillion a year deficits? I mean, at some point, these things really don't matter. Dick Cheney's right. In a sense, the deficit doesn't really matter, but until it does, I would add on that last sentence. And then all of a sudden, it'll matter very quickly. I don't know when that will be, but it seems to have happened in Cyprus and in Greece and all these other places. It doesn't matter till it matters. And the United States will not be immune from that day of reckoning, and it's coming faster and closer than people think. Here's another chart. I like to show these things because I'm a long-term thinker. I'm not a trader. Okay, the market dropped last week. It's panic selling. It's risk off. The algos kick in. People are getting liquidated. They're selling everything to get liquid. Not a problem. But this is the kind of things that you need to be concerned about and think about. These are the things that create generational wealth. What is this? This is energy versus the S&P 500. This is energy stocks versus the S&P 500, relative price performance. We all know that energy's been a disaster for a long time because of the shale boom, which is evaporating as we speak. Regardless of what's happening with oil prices dropping, it was already in decline because of the failure to another debt-fueled bubble, no different than Bitcoin or marijuana stocks. Another fart in the wind. So all these energy companies, the lifeblood of civilization, energy, permeates every activity that you do, everything that you eat, everything that you wear, everything that you use. Your life in total is completely dependent upon various forms of energy. And yet, energy relative to the S&P 500 is the cheapest it's been in what, 80 years since Pearl Harbor? Since the 1940s? That's what this chart is showing from Bank of America Global Investment. So what I'm telling you again is reversion to the mean. Does that mean it begins on Monday? Probably not. Is it going over the next 10 years? Let me ask you this question. If you're serious about actually creating big returns. If this chart's correct, would you rather be short energy stocks at this point, or would you rather be long and you can only make one decision and have to hold it for 10 years? Well, let's say 5 years. If you had to make a decision with your wealth or your money over the next 5 years, would you be short energy stocks or would you be long energy stocks based on relative performance and the possibility of reversion to the mean? I think my answer would be I'd rather be long. And then you have to say that I can't pick the exact bottom, but history shows me that when we have this much of a difference in value, that mean reversion is my friend and will bail me out and will take me, as we revert to the mean, tremendous amounts of money can be made. So that's really where I'm coming from. I don't think in increments of 3 months or 6 months. I'm thinking in increments of 3 to 5 years. When I talk about solar minimums, I'm talking about a couple decades. I'm trying to think big picture. I'm not a trader. I don't go in there and trade. I'm looking for big themes, big mean reversions, and then sit on them and let them work. That's the whole thesis behind uranium. That's the whole thesis behind the energy story in total. You're adding 80 million new people to the world every year. Plus you have industrialization and wealth creation going on in all these emerging markets. That takes energy. This is like self-explanatory. It should be. So that's it. Rationality, thinking things through logically. Why do I, go back to this again. Why do I own what I own? And what has really changed? Or if nothing on the thesis has changed, then, I don't sell out because my thesis hasn't changed just based on panicking in the markets. Long-term, value, contrarian, undervalued situations. It's painful. That's why a lot of people are not successful with it. They can't deal with the pain. And I'm sure a lot of people sell and then they don't ever get back. I'm going to get back in, but they don't then. And then they miss the move. All right, guys, that's it for this week. Look forward to the comments. This channel's really been taking off lately. I'm getting a lot of new subscribers, and I really appreciate that and welcome it. Like I said, I'm one man. I have my views. That doesn't mean they're necessarily correct, but I put them out there. Feel free to challenge them in a respectful manner, and I will respond as best I can. And we look forward to talking to you guys next week. Thanks.